once you're in here, you're instantly with, seven-figure traders who are proven to be successful. And you also get exposure to profitable ways of trading.
Welcome back, everyone, to Be the Trader. Today, I have a very special guest. His name's Max. He is from S&B Capital, and I think he's in his second year right now. And I wanted to bring him in because I've been hearing some good things about him. So I wanted to bring him in to kind of get a feel of where he came from and where he is right now. And if there's anything he may be facing, that might be able to help you as well. So Max, hey, welcome to the show, brother.
Thank you, Alex.
Hey, no worries, no worries. Let me ask you this, man. If you can start us off, just what got you interested in trading to begin with?
Sure, absolutely. So I actually began trading in ninth grade, and it was just because my parents were showing me the basics. And really from then on, I just started to follow the market and then became just interested in just finding just new strategies. So for example, I started out with just regular stocks, and then I moved on to ETF trading because I wanted to find ways to leverage my positions. And then from there, it was options. So I think that really it was just kind of that entrepreneurial spirit at a early age, and the market was the best way for me to really express that. And from that point on, I just fell in love with being able to cultivate your own ideas and be proven either right or wrong, and that's the market. There's no better feedback mechanism than being either green or red, right? And then just kind of that passion grew from there.
So you said ninth grade?
Yeah.
How does a ninth grader start trading? You know what I'm saying? How does that? Because I know people are going to hear this and they're going to be like, well, how do you have the money? And how, they're going to ask all these questions. So can you give us just quickly as you can, just how did you start trading in ninth grade? I wasn't even thinking about trading, so I'm very curious.
For sure. So, my parents were just showing me the basics, nothing too crazy. And, this was kind of just leading into ninth grade. And then I was able to just kind of trade on or tell them kind of what trades I wanted and stuff like that. So, it wasn't that much risk, but it was still something. And then I would get a small portion of whatever I made or whatever I lost. And then was able just to grow from there and build up a little safety nest. And then, at 18, be able to start trading my own money. But yeah, nothing too fancy.
Cool. So what were you doing then? Did you have a strategy? Did you can you explain how you were trading at that time? And then we'll get into where you are, once you joined S&B.
Absolutely. So obviously, starting out in ninth grade, for me, the only kind of trading that I understood was just kind of patterns and stuff like that. For me to actually understand financials would be quite hard at that age. So really, I just did technical analysis, learned by just watching other people, by just reading up on patterns, how to trade, simple sort of stuff, just kind of the very basics. And just by kind of watching the market nonstop, kind of slowly developed an edge. The sort of trading that I'm doing now is totally different than what I was doing then. I think that the real benefit of me having started that young is more so that I've just seen more price action. I've seen and interpreted more headlines. I've, witnessed different periods of volatility. So it's a little bit easier now for me to kind of go back and forth than if, let's say, you had just started out here I did 2 years ago. So that's been the biggest benefit of that. But no, the actual trading is quite different. It's a lot more complex now.
And so let's go into now. So you joined S&B. This is did you go to college?
I did.
Okay, you did. So you finished college and you go to S&B.
Yeah.
And by the way, before we just skip to that, so when you were in college, you were obviously trading too, because you said you're 18, you started trading on your own account, if you will. Were you still consistent that whole time, or did you have were you consistent? How long did it take you to get consistent? I'm just curious.
Yeah, so I was actually focusing on binary option and option trading. And the reason why was just because I was able just to develop some sort of a niche with just kind of regular chart patterns, which I found to be very profitable in trading currencies. It was a decent edge that lasted for 1 or 2 years when the liquidity of that market was actually quite high, and then it just kind of like went away, and then there was not that much volume, or at least the option pricing became more efficient. But then it was also just kind of like regular option trading, obviously because I didn't have that much capital. I wasn't able to really do uh, too much like stock trading. So
Okay.
it just, it wasn't like worth it for me then. But, for binary options and regular option trading, it was a lot more feasible with a smaller capital requirement.
So were you pretty much consistent like as soon as you start your own account?
I mean, I think that for me, it took around 6 months to a year on binary options. So I think it was like my sophomore year.
Yeah.
And then basically that was what allowed me to kind of build up a certain like safety net, just like for myself to actually feel more comfortable going into prop trading. I mean, because like obviously there's no guarantee that you do well and
Right.
starting out and leaving college, if you're not making, anything or small, it made me feel a lot more able to handle the ebbs and flows
Yeah.
until I became more consistent by having that safety net. So I'm definitely very fortunate for that.
Cool, cool. And so it's very smart. I mean, you saved up some, well, you worked your butt off and you saved up some, and then you went to prop trading. So will you start prop trading? How old are you now?
I'm 24.
24. So you joined them at 22?
Yes. Yes.
Okay. Okay. So you graduate, you join them. And what do you notice like right away? Like you join the team. What's different right when you get there that you're like, okay, this is a place I want to be? You know what I'm saying?
Yeah. So I think that the first thing is that being able to learn from more senior traders and being able to kind of be in that structured professional environment is something that I think breeds a lot of success. I think that that's one of the greatest advantages of being in a prop firm is that once you're in here, you're instantly with, seven-figure traders who are proven to be successful. And you also get exposure to profitable ways of trading. And then by being able to witness all these strategies or just like ways that people go about like thinking about the market, that is what lets you create like your own ideas and then kind of build out who you are. I mean, if you ask any trader here, everyone trades a little bit differently. It could be like the same symbols, but everyone just does things differently. And that's because you understand your personality, your edge. But in order to create that, it's not like you can just like sit down and be like, okay, like my edge is swing trading or my edge is like momentum trading. Like you have to try different things and kind of like put like yourself into that position. And the best way to do that is to be exposed to people that are doing those various strategies.
No, that's a good point. Let me ask you this then. So when you joined in, and I believe, what team did you join?
I was on Team Shark.
Okay, and I've been following S&B for quite some time myself, and so I know at least I don't know if he still is because I'm not part of S&B, but Shark was like the big trader of the firm.
Yeah.
Yeah. So what was that? Are you still with Team Shark?
Yes.
Okay, so what is that like? Because you said you got to experience, traders who have proven to be seven-figure traders, whatever it may be. What was it like that you noticed right away when you start to join that team that you're like, whoa, like this is different than what I've seen or heard on like social media or heard on just internet? You know what I'm saying? Was there any significant difference?
I think that in reality, I mean, if you met Shark, I mean, he's very down to earth and like he's always willing to share and be like your mentor. I think that people like might think that coming into a team that is, just like doing well, that there would be a lot of stress. But I think that like you would be surprised how friendly it is and how everyone's just sharing, just kind of like their
Cool.
edge and how it's very collaborative. And that's the sort of environment I think that allows you to really become successful and, very quickly at that.
I mean, so I'm very curious. So I might have asked that question incorrectly, but I was more so wondering when you started trading and you started to join that, when you joined that team, was there any significant differences that you noticed, like maybe you had different perceptions of trading coming up to that
Okay.
point. You know what I'm saying? And I'm just and the example I gave earlier, it was poorly worded, but I was trying to say that, you know, on Twitter or on Instagram, on the internet, you'll see all these people saying this is how you trade. This did you notice anything significantly different from, because you're sitting with real traders every
Yeah.
day, right? And there's
Yeah.
sometimes not real traders out there on social.
Yeah.
So that's why I'm very curious. Was there any differences there? So apologize that I asked
Yeah,
that
that's fine.
incorrectly.
So like the answer is yes. And I think that in reality, the most plain vanilla way of trading, you know, drawing a chart pattern, buying the breakout stop below there, that's just not how people trade here from my experience.
Yeah.
You know, people develop a way of reading price action and reading tape. That is why they have an edge. It's not because like if everyone could just go out and buy the breakout and put the stop at the low, then everyone, you know, they would be rich, right? I think that you see how people interpret different movements and really are able to kind of express those ideas and their entries and exits and fighting for price, and also how you like structure a trade. Are you going to be, you know, using options for a trade, or is it going to be pure equity? I think that all those sorts of things is what gives, let's say, traders here or traders at other prop firms, or even just more seasoned traders, a bigger edge over just what you see on Twitter.
I love that you said that, man. That's something that I really wanted to ask you. And I've noticed because I've been meeting traders over time, that it is different. And I love how you put it that way. So let's get more on you though. Now, how well have you been doing since you joined them? How have things been going? Like, has this been like the best ride of your life? So easy? Has it been rough spots? Can you give us an idea?
Sure, absolutely. I mean, like so far things have gone very well. You know, performance wise, I mean, like things are as good as I possibly could have imagined. There definitely have been rough spots. One thing that I feel like I'm good at is kind of slowing myself down when things go poorly. So just kind of in like measures of daily stops, right? So if we all have a daily stop, like you measure a good performance for the month, let's say you make 3 to 4 daily stops, that's your performance. I try to never draw down with the firm more than 1, maybe 2 daily stops, which means that let's say a really good day, I'm making 75% to 1 full stop. Average day shouldn't be you know, more than let's say a quarter stop, but like I'm almost never stopping out. And that's just how I like to trade. I also think that it's a lot easier to get accustomed to bigger numbers if you're not just instantly going there. Like you have that like wiggle room if let's say there's a really big opportunity and you want to put on that risk, but you don't just jump to a point where mentally it's super hard to get there. So just having that like mindset allowed me to never like put myself into too big of a hole that would then force me to not keep like making progress. So there've been probably maybe 3 to 4 like moments throughout my career here, which is maybe almost 20 months now since that I've been live, that have really like allowed me to jump, where like my risk has gone up, let's say 50% in a 1 or 2 month period because I put up 4, 5, 6x my stop. And then there have been points as well where there's been 2 or 3 months where I'm flat, slightly red. It's just kind of back and forth. I'm not getting any progress done. And that's fine. And just that has been, I think, like the biggest factor. I think also I started 2 months before COVID. So obviously going from a market that was slow, and that was like my training. And then 2 weeks later or 2 months later, crazy market.
Yeah, that's nuts.
70 VIX, like back and forth, LRPs in SPY, you know?
Yeah.
To then slowing down. So there's obviously been a adjustment period. I credit some of my success to being able to switch kind of quickly because of my prior trading experience. Like I've seen those markets. Like if you just started, like when I started and you never saw VIX below 30, it's obviously very hard to just suddenly trade now. But I think that overall, I mean, like that's been really great. I already reached the green shirt trader level here, which is 7-figure profits in 1 year. So I'm really glad about that. Obviously, I'm very humbled by that because I never expected that to be so quickly or to happen so quickly. Like that was a goal for 5 years, not for 18
That's
months.
nice.
But you know, at this point now, hey, I want to be eight figures next year or the following year. And I realized that things may change and that might not, go the way that I like it. I know that, I could be flat for the next 6 months. I could be down. I realize that, but, definitely want to be very ambitious and push nonstop, like when possible. I think that's what pushes all of us. And if you're going to be in this kind of job, like you really have to have that type A kind of mentality.
Cool, man. And you said something that stood out to me, and I don't know if I heard you correctly, but you said there was like 4 or 5 moments that really jumped your career,
Yeah.
and like 4 or 5 trades. And so I love that you said that, because a lot of people assume that, you on social media is different, right? You see your home runs every day, right? Like it's like people posting constantly. And so you have a background, proven background. People who trust SMB, they understand that SMB is a firm, a prop firm that actually needs to make money to be successful. So this is different, right? So we're getting to talk to someone who is successful, who's finding things happening, who sits next to successful traders, right? And so I love that you said that, because it kind of sheds light. It sheds light, like, hey, like you don't have to go, you're not going to be hitting home runs every day. And there's also some moments where you're going to, maybe you even mentioned like maybe breaking even for a month, or not doing so hot one month, doing amazing another. Can you explain, how do you have that flexibility? Because mentally, because a lot of traders out here in the retail space, they don't think the way you think. There's a difference there, right? Because so can you explain what you've recognized? And I know you've been training for some time, since ninth grade, right? Or ninth grade. So at the same time, you still have growth, I'm sure, as you know, because you're sitting next to some very tenured traders. But what have you learned so far with your experience that you've noticed? You know what, like traders think like this, rather than the 98% of traders who try, or 90, 70, whatever percent of traders who try to trade and just don't make it.
For sure. So I've been there where I've made like the mistake of, every time that you see some potential like setup, you just go and buy calls or puts, and you're constantly just like throwing premium away. So I've seen it in myself, where I'm always going for that home run, and where that's like really been detrimental. And that was earlier on. That was when I started trading. And I'm thankful that like the money wasn't that much then. But it was also extremely beneficial to see that in myself, and also, experience that early stage. So I think that one thing that I like to do now is to constantly try to think through ideas, try and map out like different scenarios, like keep myself busy in the sense that I'm there to react when I really see something, but I have that like intuition inside that I know if it's not right, or the volume is not there, or it's not acting right, I'm not gonna push that trade. But if I'm constantly thinking through scenarios and I have this golden scenario, it usually clicks when you're like, this is it. And that's when you just got to go for it, right? And if you trust yourself as a trader and you have the stats to prove it, not every one of those is going to be successful, but in the long run, you will make money. And I think that the reaction to the trade is also very critical. If, let's say, you're trading a breakout scenario and the following day it's not gapping or it's flat, there were probably a lot of other people that were thinking that, who probably now want to sell. So you have to be extremely reactive, extremely nimble. If that's like your style trading, or like my style trading, right? So like, that's how I built that intuition. So that way I'm not taking as many drawdowns when I'm really going for it, right? Like if you're really going to go for it and you're down, let's say it's an option trade and you're down 30%, don't be like, well, probably only going to lose 30% more. And then, all right, it's down 70% or 60%. What's left in it? Those are situations where kind of like mistakes add up. And if you cut like your mistakes as quickly as possible, even like when you really go for it, and that should save you. And for the trades that do, end up working, if you still feel like they're, that like you're right and that they're working, and you let those run, those are what create those 4 or 5 moments. If you buy, let's say, I remember back during COVID, there were like crazy names like Sandal, Naked, like, like those kind of stocks that would go from $1 to $2, and if you're buying for a breakout and the volume is there, if you let that run and you get on some portion a double overnight, that will pay for that like next time where it's just flat in the after hours and dead. And if you're not stubborn and you just cut it and you say, this is not that scenario, and you take small scratches here and there, those sorts of trades, unless you lose like 50 straight times, will not end up ruining your career or causing you to blow up. What's going to cause you to blow up is if you buy something at $1 and you let it fade down to 40 cents because you were too stubborn. That's the sort of a mistake. So as long as you trust your intuition and stick to your rules, you're going to put yourself in a great position to hit those home runs, because you're never in a bad position overall, like financially or like with a firm.
Yeah, you mentioned something earlier too, man, and that was, I'm bringing this back because I just remembered while you were bringing this conversation into where you were talking about this, and that was, you said that traders, and this is generalizing, right? We don't know, like, obviously, but you said it's not as simple as you just buy a breakout or buy an ascending triangle or a bull flag or something as simple as that, because if it was, we'd all be just killing it, right?
Yeah.
So when you think of, when I say the word strategy, what comes to mind?
What comes to mind is, how could I use my edge to either confirm or deny something that I'm seeing on a chart or price action that I'm seeing? So if, let's say, my edge is price action, it's scalping, it's like momentum trading, and I have some idea of the way that a stock should behave at a certain price. My strategy is going to be, how am I going to react at those inflection points? And am I going to be quicker than the market to enter and exit and scale a trade or stuff like that, to the point where I'm getting really good prices and I'm creating a risk reward that is really in my favor? And if I do that for this situation nonstop, and like I said, I'm being like nimble and I'm being smart with my risk reward and my or risk management, in the long run, that strategy is going to really pay off. Strategy is not, drawing two lines and buying the breakout and closing your eyes. All right. Yeah. That's not going to, make you money. But watching the tape and seeing how a stock behaves and whether or not it's doing what you expect and using your edge, that, let's say, breakout strategy is something that is a strategy, because you are using your edge and you are increasing the risk reward in your favor dramatically.
Why do you call them? I'm very curious. I think I have the answer back here, but I need to ask you, why do y'all call them inflection points rather than, some people are calling them like resistance levels? I get it's just semantics, but I think there's a reason why y'all call them this. And so I'm curious on your thoughts on that.
I think that inflection points speaks more volumes just in the term to how important a stock is at a certain price. Like, this price will determine what a stock is going to do, and true buyers and true sellers will show their hand, right? So for example, maybe 2 months ago, there's a very big breakout in Apple. It was like a 2-month long pattern. It broke like 150, then it stuffed. So that 150 should have signaled to people who was in control. It was clear that sellers were in control because of how the stock reacted at this inflection point and what the ensuing price action was. It was not simply just a resistance. It was a inflection point for what the stock is going to do going forward, and its true colors showed itself.
I love that you said that, man, because that's what I was thinking. Like, the word inflection point, it keeps you open. The word resistance or support kind of puts you in a, like, it's support. You know what I'm saying? Like,
it should bounce.
It should bounce rather than let's see what this is just an inflection point where something should happen, and then we know, and then the odds will dictate, based on what happens after that. Which I love that you said that. I always hear you guys saying inflection points, and I was like, man, there has to be a reason they say this, and I appreciate you explaining that, man.
Sure. Ninth
been the hardest thing for you, man? Because it sounds like if anyone's listening to this, they're probably gonna be like, dude, this guy's like, he's a natural born trader, since ninth grade, he's been trading.
Yeah.
Maybe it's just easy for him. So, like, can you explain, like, what's been difficult for you? What were some moments where you just like, crap, like, I need to fix this now to move forward? Were there a couple of moments? Were there one? Like, can you explain a couple of those?
Sure. I think that for me, the biggest thing is probably bumping up risk to a point where the numbers are starting to feel super real. And you're thinking to yourself, wow, if I lose this, this is real money. And I think that's something that I definitely have had problems with. And I try my best to not let that impact me. I think that when you do lose that or you do make it, it always feels like, it doesn't, hit you as hard. Like you move six figures in one day to the upside, you're like, great. You lose it, you're like, wow, that was awful. But it's not the same as, it's not like the same feeling as you envision, in your head, like when you're up at night at 3 a.m, panicking, because of trades. If you're like, oh my God, if I lose this. So I think that for me, kind of coming to terms with just like the natural process or progress of a trader has definitely been a hard part, but that's also all of our goals. All of us want to be sizing up. All of us want to become the next big trader. And I think that what I've done to just keep myself in check is really just be selective with those trades that I put on a lot of risk. When I catch myself doing stupid trades, I try to at least size myself down or go back to numbers that will not make me fearful. Like if let's say you were theoretically risking on average 10,000 a trade, and you start seeing yourself do some stuff that you're like, wow, I'm just throwing, money away. Try and go for $1,000 wins, something where you can really keep your head in the right space and not let those financial fears or size fears really impact you. And then before you knew it, you walk into a bigger trade, you have 2 or 3 wins. Now you feel some kind of freedom from being at your lows, your headspace clears. And I think that that's been, a really good way to cope with that. I also think that sometimes just talking to yourself, being like, this is your job. It's your job to put on risk. Just go and do it. If the setup is there, if it loses, it loses. And just do your damn job, right?
Yeah.
And
Yeah.
just kind of that like straight talk is sometimes what's necessary.
Interesting. Can you tell me how did you, when you started, right, with SMB, did they just give you a big, can you explain the progression, in size for you? Did they just hand you a freak ton of money, or was it start small? So, because there's traders out there who want to learn how to trade, but they may be risking too much and they may want to size up, but they might do it improperly. So I want to know how you, through SMB, have learned to start small or start wherever you did, and then how you gradually sized up.
So everyone here starts with the exact same risk. I don't know if I can say it.
Okay, sure.
It's in the 3 figures.
Okay.
Right. And then you grow from there. And one thing leads to the next. And it's just every few weeks, if you're doing well, you get a wrist bump. And you'd be surprised in 52 weeks, if you do really well every 2 weeks, that's like 20 wrist bumps. You get 20-30% bump. I mean, you think about how that adds up if you really are very consistent and doing really well. Obviously, not every 2 weeks is going to be green. Not every month will be green.
Sure.
But at the same point, that's pretty exponential. And I think that not focusing on, okay, when's my stop going to be 200 grand, and focusing on just how could I bump it up to $1,000, and then from there 1,500 or 2,000, go from there. I think that that definitely aided in that progress. And I also don't know if I can say full numbers or not, but
Sure.
My stop now is at least 40, 50, 60x what it started out as.
Nice.
So yeah.
So was there a systematical way to size up that y'all approach? Because you said every 2 weeks, if you did well, you'd bump up your risk. Was it like a percentage bump up? Was it can you explain that?
Yeah, so it's basically, it's up to the risk manager. It also goes based on just your performance.
Okay.
Did you make your stop? Did you make 15 extra stop? I remember during March when stuff was crazy, I had a time where I made 15 times my stop because there was so much volatility that you do one good trade, it goes straight, in your way. So those periods were times where you might get a 50% bump.
Okay.
But right now, for the most part, I'd say you make 3 or 4 times your stop in a month, and you get a decent percentage bump. It's not double, but it's not 50%, but it's decent percent.
Nice. So it depends on the trader, is what it sounds like, and it depends on how you're doing. and how
Yeah.
well you're moving away from your original size at that time when you started that previous week.
I also think that it depends on your risk management. Are you someone that hits stop once a week? Are you someone that has gone overstop, or are you someone that will only lose 50 to 75% in a really bad day, and and they can trust you with their money? If they can trust you with their money, they're going to be more willing to bump you up because if you keep putting out those great numbers and you show that you are responsible and that they can trust you, they're going to be a lot more willing to bump up your risk a lot quicker because they know that they're not being foolish with their money.
Right. It makes sense. They're investing, right? It's the same concept. And a lot of people might be hearing you use the word stop a lot. So for people who are probably scratching their heads, can you explain what you mean by stop?
Sure. So stop is your daily risk. It is how much you can lose in one day, and everything works M to M. So it's basically during that trading day, how much could your positions move? How much could you lose in that one trading day from the prior 4 p.m. close?
Cool. And by the way, man, I'd love to know from your perspective, what has changed in you since you joined them from the beginning to now? Like, what would you say is the most significant change? And if there is one that really helped you get to where you are, because I believe, do you think you're going to be earning, I believe it was like, they call it like, I know you said you had a green shirt, right? So the next one is the black shirt, right?
Yeah.
Which is crossing 2 million in net profits, which is nuts, which would be sick. So like, do you feel like you're on your way there? And if you do, what do you feel like was there a couple of moments? Was there just one big moment that really like, hey, this is what I need to do?
Yeah. I mean, hopefully that comes quite soon because I'm quite close, but not quite close, but I'm in the ballpark. But I think that really just kind of what my perspective has been. I think that it comes down to just keeping a very responsible attitude. I think that when you trade for yourself, I know that I've been more loose with my structure. Like it's not like, okay, I'm fine losing 30% on this trade. I think that when you become, when you work at a prop trading firm or you say, this is my full-time job, right? I think that having very strict rules and behaving in a very professional way is that thing that you grow into. And everyone that is successful does that. And that's something that doesn't really take that long to learn, but I think that there's definitely a switch that comes on. And if you're trading, with $1,000 daily risk, it's a lot easier to say, okay, I'll risk $600 versus $700 or 200 versus 225. If you're trading 100 grand, there's a difference between $20,000 and $30,000. And I think that as you become more mature, I think that really honing in on your set of, I guess, values in terms of responsibility and your structure for your day and for your career is something that you really have to adapt to quite quickly to be successful.
Look, if you could go back, man, and go back in time, right? And to give yourself some advice and be like, yo, this is what you should be doing. You need to be doing this to get to where you are now quicker. Like, what would you tell yourself?
Oh man. I mean, I think that I would have liked to have kind of had the same mindset that I do now, rather than kind of the more lackadaisical, go with the flow, sometimes irresponsible mentality. Like, I wish that when I was trading for myself, I had the same strict guidelines that I did now, just so that way maybe I could have developed my edge quicker instead of, let's say, because I feel like I'm only 2 years into a trading career, and with like a few extra years of just like knowledge that basically someone could probably learn and develop in a few months or a year. If I was doing the right things all that time, maybe I'd be way better off now. Maybe I would be able to read markets to the point where my P&L would be twice as good because I just like recognized situations a lot faster. I mean, imagine going back to 2020 and having a full set of experience or knowledge about how to trade properly rather than kind of like learning it as it went.
Yeah.
that right there is life-changing money. So
And because you said I needed before we start to wrap this up, I want to ask you one
yeah,
more thing, and that was give an idea of what just you don't have to I don't need names, right? But just an idea of traders, because you work with traders every day.
yeah,
You're surrounded by them. So I know you see diversity because you mentioned
yeah,
before that there's different types of traders, different everyone trades a little bit different. So my question is just to give a range of if there's a range.
yeah.
Out of all those traders there, including yourself, like, would you say a lot of you guys are like big win percentages, like in terms of like 80% swing rate, like every time you swing the bat, you hit it,
Yeah.
or is it more like 30? Is it more like 20? Is it more like 50? And there's a reason I asked this question because
Yeah.
I want to hear what you have to say, but I also want to, I want to hear what you have to say first. Then I'll explain why I asked that question.
Sure. So I think that for someone like myself, it really ends up probably being around 50%. And that's because I'm fine, or I cut losers quicker. So like for example, I'm fine taking scratches
Yeah.
and maybe like not like letting things play out. Whereas let's say other traders will kind of or nurse a trade like longer, so to speak, and really just kind of like focus on getting that into a big win or into a profitable situation. Like they're more fine drawing down because they see their edge and over time they're going to be right. Whereas for me, I'm like, okay, I'm wrong. I'm going to get out and move on to the next thing. Pros and cons to both.
Yeah.
I think that most traders are somewhere in like the 40 to 50% range because I don't know a single trader that's biggest win is less than their biggest loss that is successful.
Yeah.
So, and most people are going to try many different things. You are going to put on feelers and see what's working, what's not. So therefore, it makes sense that that is going to bring down your win percentage. And
Would you
yeah,
say it's not really that important, like the win
I
percentage?
don't think it matters because like you put on a feeler that's 1% of your risk and you lose 10 different times. And the time that you think it's great, you go 50% in and then you scale it up. And that's the time that you win. I mean, all that matters is the overall. I think that what matters is maybe how much you're drawing down in a position. So like how good it is your price execution.
Yeah.
That's something that really will make a huge difference. I mean, you let's say buy a dip after a pullback. Are you buying it, a quarter ATR from the high? You're buying it like half an ATR or I should say from like the low of like the next pullback, right? Like how good of a price are you getting? Or if you're buying a overextension, how near the low are you buying it, right? Those are sorts of things that your price there is going to matter way more for your overall like P&L than like whether or not in the grand scheme of things, you're right 45 or 47% of the time, in my opinion.
And my last question is, and the reason I was asking that is because I thought like what's more important, which you kind of already answered without saying it, like you answered it clearly, is how you handle when you're right and how you handle when you're wrong, right? And sizing it appropriately and risk management. That's pretty much what it comes down to. It sounds like.
Yeah.
You mentioned something, and this is the last question, and then I'd love for you to share where people can learn more about you guys. That was, you mentioned this, you said, I wish I would have had a lot more guidelines back in the day, like when I asked you that question earlier. What do you mean by guidelines?
I think that I mean structure. I think that 80+% of the information online that you see on Twitter or financial media is just BS. And I think that there's really no consistently profitable guideline out there, or there's not that much out there, and it's harder to find. Or at least that, you look up how to day trade, right? You're going to find a lot of stuff that is really going to be negative for starting out. And I think that, I mean, I know that like S&B does like YouTube videos that are really beneficial. And in there, I mean, like I've been on a few of them and those are more structured on how you do a trade, but there's a lot of, like YouTube videos and like Twitter content that is not that. And it's like, buy this stock and it's to go up 300%, or it's use this like, pattern, put stop here, do stuff like that. There's so much information out there that like after seeing all of that garbage, information, and then seeing how a real prop firm trades and how real traders do, it's just not even close, right? So real guidelines on how to actually structure your trading career. And then also in risk management, that's actually not just someone saying, be responsible, and actually how to go about it, which is something like that you learn with like working with a team and, having a risk manager. Those are things that would be beneficial. It's also not fully like feasible probably, but those would definitely be things that would be awesome for like new traders to start. So yeah.
Well, look, man, Max, it's been awesome. It's been awesome. Like you shared some great ideas, some great feedback, and just what you've seen by the differences. I love it. I know a lot of people are gonna get a lot of value from this. And so if they have questions, if they want to connect with you in some way,
Sure.
how can they do that?
Sure, absolutely. So feel free to email me, mganik, MGANIK, at smbcap.com. Also, feel free to DM me on Twitter at maxganic. And yeah, I mean, more than welcome to ask questions. And yeah.
Well, I'll make sure to add your information on the description below the video. Again, thank you so much, my man, for being here and spend some time with us, brother.
Thank you for having me. Appreciate it, Alex.